Okay, continuing on to section 8.2. Now that we've set up the worksheet, how do we complete it? How do we calculate whether a business had a net income or a net loss? So what is the balance sheet? The balance sheet is kind of a picture of the business at any given point in time. So the balance sheet section of the worksheet are going to contain the assets, liabilities, and owner's equity. And we're going to take those amounts right there. I'm going to open that up a little bit. So the balance sheet are all of the permanent accounts. So cash is going to come over accounts receivable. Again, I would use a formula, equals, and then point to this cell to grab it. And you're going to bring those over, and then the credit balances coming from the trial balance are going to come over here. We're going to talk about withdrawals in a minute because we know withdrawals is not a permanent account, but we don't want to use it in the calculation of the net income or the net loss. The income statement section of the worksheet are going to be the revenues and expenses. And just similar to that, we're going to, whoops, I thought that was the one. We're going to take our revenue and we're going to transfer the credit over to here, and we're going to take our expenses and transfer the debit over here. Income summary, we're not going to worry about just yet. It comes to play in chapter 10, but we're just going to put some lines through it or zeros through that number. So we're extending those numbers across to the balance sheet or the income statement. And then we're going to draw a ruling across this right here to say now we're going to add these columns up. And I'm going to show you this in Excel or Sheets when we get to it, but I would do an auto sum here, and I would drag this whole range because it's going to default just to right here. But if you do that, if you drag the whole range, we can take the fill handle and we can pull it across. And sometimes people do that. They just do this much and they pull it across, and then these numbers up here don't get added in. So kind of a tip that we're going to talk about when I get to the problem. Now, here's the crazy thing that drives students in accounting crazy at this point. These numbers are not going to match. You don't want them to match because that means you broke even for the accounting period. So none of the four numbers are going to match, and it's going to be okay. So what are we going to do now that these numbers don't match? We're going to figure out if we had a net income or a net loss. And so that accounting principle that we talked about a little bit, GAAP, saying that we're going to match an accounting period's revenue to the accounting period's expenses. And we're not going to throw in some from the previous month or from the next month. We're going to show just for that accounting period. Owners and managers use this information to analyze results. So we're going to figure out if we have a profit or a loss, and then we're going to help us figure out, okay, what do we need to cut or what do we need to do better? And like I said, withdrawals, really important thing. They are a temporary account, which means they should go on the income statement. Permanent accounts go on the balance sheet. Temporary accounts go on the income statement. But withdrawals is not something you want to factor into net income or net loss. And that's what the income statement is showing us. So we're going to put those on the balance sheet. And that's the one quirky thing about the worksheet is where the withdrawals go. So we are going to calculate if we had a net income or a net loss. That calculation is always revenue minus expenses. If we have more revenue than we have expenses, we have a net income. And if we have the reverse, if we have more expenses than we have revenue, we have a net loss. And so we're going to calculate that for the very first time from the worksheet. So the steps to do that are, we've drawn our single line across here. The first thing we do is we skip a line and we write our net income. The second thing we do is we take total revenue minus total expenses. And we hope that that is a positive number. And if it is, we write that number here under the debit side of the income statement. And then we write the same number under the credit side of the balance sheet. And why do we do that? We are hoping, we talked about maybe in chapters 3 or 4, what increases capital? Well, revenue and investments are the two things that increase capital. So if we have more revenue than we have expenses, we're going to add that amount into capital as the net income. And so that would be a credit on the right side of our accounting equation, assets equal liabilities plus owner's equity. Kind of a hard thing to visualize right here, I get that, but you'll kind of see that as we go on. And that's what this is kind of talking about here. Once we have that piece done, okay, we put the same amount here and here, we're going to draw another line underneath there. We're going to do a single rule, and we're going to say, let's add those numbers up. So these two numbers together should be the same as these two numbers together on the income statement. And they should do the same on the balance sheet as well. We bring this number down and we add the new net income to our credits, and they should equal. So kind of an interesting concept of how that works. Now, conversely, if you have a net loss, it works a little bit differently. So what happens here when we have more expenses than we have revenue? In that case, this minus this is going to be a negative number, and we're going to put it on this side so that the two will eventually equal. And then it's going to be a debit. It's going to be a loss to capital, and so it's going to go on this side. If you tried to put them on the other sides with the net income, these two numbers then would not be the same. So you want to try, in the end, you're trying to get these two numbers to be the same and these two numbers to be the same. So net loss, they're on the inside. Net income, the two numbers are on the outside. So kind of review the steps. We enter the heading. We create the trial balance by entering the account names and the account numbers. We prove the equality of the debits and the credits for the trial balance. We extend the permanent accounts over to the balance sheet side of debit or credit, and we extend the temporary accounts to the income statement sides, debit or credits. We total those. We determine if we had a net income or a net loss. We put that net income or net loss on the correct sides of the income statement or balance sheet, and then the two sides of the income statement and the two sides of the balance sheet should be in balance. So I'm going to do a problem with you next, so please look for that to kind of, solidify what we've been talking about.